Good afternoon, or sorry, good morning, everybody. My name is Thomas Madden. I am Director of Economic Development for the City of Stamford. I'd like to thank you for attending this webinar. We hopefully be able to answer a lot of your questions today. We just want to first get some thank yous out of the way here. So Heather Cavanaugh from the Stamford Chamber of Commerce, Brian Griffin from the Norwalk Chamber of Commerce, Matthew Mundell from the Westport Weston Chamber of Commerce, Beverly Balaz from the Fairfield Chamber of Commerce, and Marcia O'Kane from the Greenwich Chamber of Commerce helped sponsor this webinar. We wanted to get as much information out to our businesses with regard to what is happening at the federal level, and hopefully be able to answer some of your questions that are now popping up as we go through the different SBA loan programs, as well as some of the healthcare and employment questions that we have. So we've got a great panelist or set of panelists today for everybody. As part of this, we have everybody on mute, but we are going to be able to answer questions. So if you go to your chat box on your side, you'll be able to submit questions right there, and we'll hopefully get all our panelists to be able to answer them. If we do not have time to answer your questions, we will find answers for you, and we will be posting them on the city website here with those answers, or trying to get back to you through your email. We have a quick poll I'd like to do with everybody, just to help us out in terms of looking at what webinars we would like. So if you just take a couple minutes here for people who are on their computer and watching, if you
could. It's funny because sometimes, you know, when you log into these things, they could see you. Like sometimes you could turn it off, like, right? But this one, I had to make sure. Yeah, I had to make sure they couldn't see me.
All right. Excellent. So it looks like a lot of it is the SBA loan application help that people are looking for, and employment questions. So I'll let this keep going just for a couple more minutes. We've got 41% of that have voted so far. So if we have anybody else that'd like to vote, we'd greatly appreciate that. So that helps us out in trying to set up our next panels and to help everybody out during this time period. As well, we also have handouts. So if you check on the side dashboard there, we have 5 handouts for you. So you can click on the dashboard on the side. We have some frequently asked questions from the state DECD for small business owners that you'll be able to download. We have the Department of Labor frequently asked questions that will link into their guidance for looking at unemployment benefits and a few of the other programs. We have the Small Business Development Center, their payroll or paycheck protection program frequently asked questions and guidance, so you'll be able to follow that. We also have the SBDC's COVID-19 resource guide, and Dan Schwartz just put up his, it's a Stanford PDF. That is some guidance in terms of what he'll be talking about a little bit later, and you can download that. So first off, I'd like to introduce our panels, and I'll let everybody explain who they are. Our first speaker for today, of course, is Senator Chris Murphy. Senator, we thank you very much. I don't think there's an introduction that is needed on this one, but I'll let you say a few words if you'd like, please.
Well, thank you very much. Thanks everybody for joining the call and for inviting me to take part today. This is obviously a really critical time, and it is an iterative moment in the sense that all of us in positions where we can affect public policy are trying to learn in real time about what we can do to keep families whole, to keep businesses alive, but of course, first and foremost, to turn the corner on the public health crisis. There's no amount of stimulus, there's no amount of assistance to families or small businesses that can save the economy if we don't defeat this virus. And so my first responsibility is to make sure that we have a federal policy that supplements state policies to be able to get the transmission rate of coronavirus in a place where we can start to reopen. But during that period of time, we understand that without assistance to families, without beefed up unemployment benefits, there's going to be an enormous amount of hurt out there. We also understand that this is a potential mass extinction moment for small businesses, many of which were hanging on even during a good economy because of the increasing power of these massive quasi-monopolies, big box stores, et cetera. And so keeping you all alive through various public policy mechanisms right now, I think is amongst our most important jobs. And what I'm just trying to do is seek to collect as much information as is necessary to get this public policy response right. And so if I leave you with anything, it's that we are just clamoring for you to reach out to our office. I've got David Tuccio on the phone with us today from my office. He has handled for a while all of my business outreach across the state. I've also got Trayvon Diaz, who handles Fairfield County specifically for me from an outreach perspective. And so jot those two names down because I'd love for you to connect with them after this call. So in the $2 trillion assistance package that was passed by the Senate and House, signed by the president, as I mentioned, first and foremost, there's assistance to families, cash payments that we'll be getting out the door in the next several weeks of $1,200 per person, $500 additional for families, increased unemployment benefits. The weekly benefit is increased by $600. And then the unemployment benefit itself is extended for an additional 4 months. There is significant assistance to states. Connecticut is probably going to get somewhere in the neighborhood of $1.3 billion in order to help us plug holes in our budget and help us respond to the crisis. States are really actually the only ones that are on a daily basis responding to the crisis because the Trump administration has essentially made the decision to stand down and let states take the lead. And then there's funding for hospitals, $100 billion for hospitals. Hospitals have seen their revenue decrease by 1/3 to 1/2 as they've shut down all elective procedures. And of course, we need to dramatically increase funding for frontline healthcare workers to make sure that they stay on the job. But for the purposes of this call, what you will likely be most interested in is the support for business. And I am trying to be an expert in 200 different programs that are in the $2 trillion bill. And so I will frankly leave the details to others on this call who are tasked with being specific issue area experts in the new payment protection program and the refundable tax credit. But what this is designed to do is to allow businesses to stay together during this crisis moment, to allow for you to keep your employees close by using this grant that is structured in the form of a forgivable loan in order to continue to make payroll and then use a portion of that money for other expenses so that when this crisis passes, you are able to essentially reconstitute as a business, even if you have temporarily shut down your operations or greatly curtailed them. This is in some ways an alternative to unemployment benefits. Now, you do have a beefed up unemployment benefit, and so if you do have to lay off a portion of your workforce, you can have some confidence that they're going to be able to get that benefit, and hopefully it will be enough to get them through. But for businesses that would rather continue to employ, this is an option as well, and we hope it's an option that works. But we are going to be back in session within the next 1 to 2 weeks, and what I am collecting right now is experiential learning from businesses who are starting to apply for the payment protection program, from lenders who are starting to get the money out the door so that we can make adjustments to the extent that this isn't working as designed. Because listen, let's be honest, we wrote this in about 7 days. Many of you know that in consultation with chambers and businesses, I did propose a different structure. I got together with several other senators and introduced the Main Street Emergency Grant Program, which was not forgivable loans through lenders, but instead grants through the Department of Treasury. And I think, and I'm going to be fascinated to hear your feedback after this call is done, that the jury is still a little bit out on whether running this program through lenders was the right way to go. And that's why I really want to hear from you, because there are adjustments that may have to be made. Because we didn't put a lot of restrictions on lenders in terms of how they dispense the money, early on, what we've heard is that lenders, maybe understandably, have prioritized longstanding customers, bigger accounts, and businesses that have had existing lines of credit or loan facilities. That unfortunately leaves many small businesses out, either small businesses that didn't have big, deep relationships with 7A lenders, certain businesses like farms that, frankly can't go through the traditional banking system. And so we want to learn from the early days of this program and figure out how to right size it going forward. And so my hope is that you will just sort of accept this offer to be in touch with us. Let me mention one more thing, and then I know I'm going to try to take a few questions before I have to jump off this call. I am also very, very focused on the supply chain of critical medical products right now. I've actually organized a call of about 30 senators that's starting in 45 minutes that I'm going to jump off and prepare for to try to see if we can get some consensus on legislative steps to take in the next emergency relief package. I remain very scared that we do not have a national coordinated medical supply manufacturer and distribution system. And Governor Lamont and I talk on a near daily basis about the fact that he is competing every single day with hospitals, with other states, with the federal government, to try to get ventilators and masks and tests into Connecticut, driving up the price and frankly, wasting a lot of time and effort. I do not understand why the Trump administration has not temporarily taken control of the manufacturing and distribution of that sort of limited amount of critical medical supplies that are necessary to ramp up testing and to get personal protective equipment out to healthcare providers. But there's increasing interest in Congress stepping in and passing a law that would require that to happen. And if we did that, as Governor Lamont, Governor Cuomo, and many others are begging the federal government to do, I think it would make the system much more rational and make sure that we don't have price gouging and that the supplies get to places that need it the most. But if anybody on this call, believes that they can, be in the medical supply chain business, especially for protective equipment or any of the components that go into the test, listen, ideally you should be going through FEMA so that they can coordinate a national network. But for now, reaching out to our office or the governor's office, if you can potentially be part of the solution, is the way to go. So let me end there. I'm just deeply appreciative of everything that the chambers across the state are doing to try to coordinate advocacy into our offices. As I said, I'm working 24/7. My staff is working 24/7. I am in very much the same boat that many of you are. I have a staff that's all working from home that I'm trying to direct. I have two elementary school age kids who are home. I'm talking to you on the phone as I'm sitting across from my second grader who's got his headphones on doing an online math lesson. But my first, second, third priority right now is representing you in the Senate, making sure that we tailor these responses to keep you open and operating in the long haul. So I'll stop here and see if there are a few questions before I jump off.
Excellent. Thank you very much, Senator. I'd be remiss not to ask on behalf of the chambers here, with the chambers typically being a 501c6 organization, they've been excluded from any type of package to help them out, as part of getting out their resources and helping out businesses, the small businesses within our area. Do you see the chambers and other types of nonprofits like this, moving forward to be able to receive funding?
So it's certainly on my list of issues to address. Some of you may have seen yesterday, Senator McConnell announced that he wants to allocate another, I think, $200 billion for this Paycheck Protection Program. Frankly, I had proposed $600 billion. I never thought that $350 billion was going to satisfy the need. So I think it's inevitable that we're going to need to extend the size of the program. But I think we should, at the same time, fix the problems that we're identifying. So I'm a little nervous to just, right now we're not running out of money. We're only 3 days in. There's no danger this week or next week we're going to run out of funds. But I do believe that when we allocate additional funds for this program, we should make the adjustments to make sure it covers everybody that should be covered, including chambers, and we fix any issues that we identify in the first week of the program. I know these numbers start to sort of numb people, but $200 billion is an awful lot of money. And instead of just appropriating that without sort of adjustment, I think would be irresponsible. And so a lot of us are giving feedback to Senator McConnell's office today that we are all for making sure that there's enough money in this program to cover everybody and every small business who wants it, but let's take care of some of the problems you've identified, like the one you're talking about for chambers at the same time.
We had another question come in, and it related back to our hospitality industry. So with hotels, conferences, conventions, a lot of these have been shut down under state executive orders. And will that be opening up for potential federal funding with loans and grants?
Well, I mean, the hospitality industry is obviously eligible for the payment protection program. And in fact, there's a specific carve out in that program to allow for slightly bigger sized businesses in the hospitality industry to qualify. One of, I think, the tricks in managing this program going forward is understanding that it's going to have to continue beyond June 30th in states where the orders require the businesses to stay down for longer periods of time. And so, we had essentially guessed when we wrote this program as to when it would expire. We all are crossing our fingers that in Connecticut we can reopen by June 30th. But if we can't, or frankly, if there's a hotspot that pops up in another state that requires them to be shutting things down in Georgia, just as we're in Georgia or Texas or wherever, just as well we're opening things up, we've got to have some flexibility there. And so that's one of the adjustments. When I talk about adjustments, that's one of the adjustments we need to make, is to recognize that hard stop of June 30th it may not work for certain parts of the country, and we especially have to be sensitive to the hospitality industry, which can't decide to open on their own if there are state orders requiring them to stay closed.
Excellent. So I had a question also come in here. So it related back to your April 7th call yesterday. I guess we're talking about what is meant by net income in determining salary and after estimated taxes. So you're getting follow-up questions from your call yesterday.
I will, frankly, I'm going to let if you don't mind, yep. the detailed questions about calculations for eligibility are probably best not answered by me. And I've been doing calls, just so everybody knows, I've been doing calls every day with different groups of business leaders across the state, and so that may have been a follow-up from yesterday's call, but I'll let some of the experts on the back end of the call handle those more specific questions.
Perfect. Now, one of the things that we've been hearing about is a much larger infrastructure bill, and maybe you can enlighten us if that's part of what some of the stuff that you're getting into, Senator McConnell.
Yeah, so there certainly is this broader conversation about what would be necessary to jumpstart an economy that is, going to be in the depths of a recession, a different kind of recession prompted by a public health emergency, but a recession the depths of which we have not seen in a very long time. We don't know how bad this is going to get, but from 2007 to 2009, the U.S. economy during the Great Recession lost 9 million jobs. In 2 weeks, we lost 10 million jobs. And we're probably not at the worst of it yet. And so the question is, can you manage this through an assistance package to small businesses and families and beef up unemployment benefits, or do you have to go bigger and start to look, for instance, at infrastructure investment to sort of start up the commercial construction business? And I think we are all trying to answer that question right now. Listen, I am, as many of you know, and have been for a long time, very supportive of a massive federal investment in infrastructure. So count me always ready to spend money on infrastructure. In Connecticut, a state where we typically get back $1.06 in infrastructure money for every dollar we send to the federal government in infrastructure taxes, we come out on the winning end of infrastructure investment. We're obviously a net donor to the federal government in general, but on transportation dollars in and out, we are a net winner. So I am always going to support increased transportation dollars. It's the lifeblood of our economy, moving people to and from New York and Boston. The question just is whether, I think the question is really whether there'll be Republican support for an infrastructure package here. I think Democrats will support an infrastructure package. I don't know yet whether Senator McConnell, who has never wanted to do an infrastructure bill, will support that in the current moment. And I have not heard from him interest in doing so. I think Speaker Pelosi has expressed interest. Democrats in the Senate have expressed interest. I think right now how this works is that the White House kind of goes along with whatever Congress decides. The dynamic is such that right now they're sort of just letting Congress take a lead. So I think we're all pressuring Senator McConnell to think about things like that. And if he's game, I think there's plenty of support from it in other quarters.
Perfect. Well, I'm going to give you one last question here, Senator, because I know you're probably teaching a new math to your son here. Does the senator support the pandemic insurance? Someone just wrote another question here. I just lost it. Support the pandemic insurance program similar to the terrorist risk insurance program.
I have not gotten deep into that. I was one of the experts and primary backers of TRIA, the terrorism risk insurance program, for years. That was a really, really important program for us in Connecticut and the greater metro New York area. And so I know a lot about TRIA, but I have not become familiar with pandemic insurance programs, and I will do so. I will add that to my list, and maybe what I'll do is I'll come up with a cogent response for you to take a look at some of the proposals out there, and you can post that on your website or the Chamber's website so that people have a look at it. The issue is that insurance companies didn't want to insure against terrorism risk, and so the federal government had to come in and essentially create a backstop. And you can foresee a similar issue where insurers are not going to want to insure against losses from a pandemic. And so we may have to have a public policy response for that as well. I'll do some thinking about it.
Perfect. Well, I have a bunch of other questions here, but I want to be respectful of your time. I appreciate you coming on to the webinar. We look forward to hopefully having you on in the future. And what we'll be doing is I'll send Trayvon a bunch of these questions that we have here. And for the people who we just can't get to, we will get answers up to everybody, or at least try our best to direct resources for this. So
yeah, and we'll get back to everybody. And so any questions that we didn't get to today, we'll make sure to answer. Not a problem.
Perfect. Again, Senator, thank you so much for your time. It's greatly appreciated as always.
Thanks, guys.
Perfect. We are going to move to our second panelist, Valeria Bisceglia, who is with the Small Business Development Center here in Connecticut. I'm going to turn it over to Val, and we'll change her up. There we go. All right, Val, you have the comm.
All right. So, good morning, everyone. Thank you for joining us. Thank you, Senator, for joining us as well. The Small Business Development Center is normally tasked with assisting small businesses throughout the stage of starting or growing, and we're funded by the Small Business Administration in cooperation with the state and the University of Connecticut. So all of the services that we provide to businesses are at no cost. So I wanted to show you briefly, just as the Senator mentioned, there are a wide variety of programs available. And as a highlight, the Paycheck Protection Program and the Disaster Loan Advance is probably one of the two that most people have questions about. There's also an express bridge loan and some debt relief for existing SBA loans. I just want to briefly bring everybody's attention to the link that we have at the bottom. CT for Connecticut, SB for small business, and DC for Development Center. That is us. Our website is ctsbdc.com, and we've created a webpage dedicated to resources for businesses during COVID-19, which has a fairly comprehensive list of both federal, state, and other resources. So feel free to visit that. We update it on an ongoing basis. So let's start talking then about the Paycheck Protection Program. So the first thing is, what is it? The Paycheck Protection Program is a loan from the SBA that is being administered through approved lenders. And the focus of this program, as the Senator was mentioning earlier, is to keep the workforce employed during the COVID-19 crisis. Now, something that I want to point out, because this has been a common question, is that keeping your workforce employed does not mean bringing them back to work if your business is not on that list of essential businesses that can be open. It basically means retaining them in your payroll so that they don't have to go and file for unemployment. If you've already had to lay them off, you can bring them back retroactively to February 15th and pay them back wages, or you can bring them back for the weeks following your receiving the loan. So I wanted to put that out there because it is a common question. Who can apply? As you can see on the screen, most small businesses with 500 employees or less qualify. They have to meet the SBA size standards, which can be found on the SBA's website. Some businesses, again, are classified in terms of revenue rather than employee sizes. Most nonprofits focus on 501c3s, and veteran organizations with less than 500 employees qualify. And the SBA did release a clarification stating that faith-based organizations are eligible. Sole proprietors, self-employed, and independent contractors are also able to apply for this program. And you must have been in operation on February 15th of this year in order to be able to apply. So what are the basics of the loan? You can borrow up to $10,000. The interest rates and the terms are the same for everybody. So 1% for all applicants, a 2-year maturity, and there are no personal guarantee or collateral requirements. Now, this can't be used for just about anything. It has to be used for qualifying payroll expenses, and this includes some health and leave benefits. Payments on mortgage interest, however, not principal. Principal of mortgages is not covered. Rent and utilities, and you can also pay interest on debt that was incurred prior to February 15th. Again, interest, not the principal of the debt. So a couple of quick notes. The loans are not intended to replace lost sales or to be used for expansion purposes. And in order to qualify for loan forgiveness, the SBA has issued guidelines that say that at least 75% of the loan must be used on payroll. So the big trick is, how do you calculate the amount that you qualify? Can everybody hear me?
Yeah, we can hear you.
Okay, sorry. I got a message saying my entry wasn't valid on the automated system. So we calculate the payroll cost by adding the costs that are considered qualified as payroll costs, subtracting costs in terms of payroll that are excluded, and that's how we get our payroll cost. And I'm going to go in a minute as to what is qualified and what is excluded. There is a separate note on non-seasonal employers and seasonal employers as to how you calculate. So your maximum loan, if you're not a seasonal employer, would be 2.5 times the average total monthly payroll costs that you incurred during the prior year. So you will look at your 2019 monthly payroll costs, and based on those that are qualified, you will multiply that by 2.5 times. If you were not operational last year, you will take a look at your monthly average cost for January and February. Now, again, keep in mind, in order to qualify, you have to have been operational as of February 15th. If you have a seasonal employer, it will be 2.5 times the average total monthly payments for the 12-week period beginning either February 15th or March 1st. You can actually choose based on what your seasonality is to begin that period on February 15th or March 1st, and ending, of course, at the end of this whole period, which is June 30th. So there was no way around putting a lot of text on the screen for this one, so I apologize, but you do have, as Tom added the guide that we included on our website, you do have this on the downloadable file so that you can look at this in detail and with better timing. So this includes what qualifies as payroll costs, both for employers and for sole proprietors, independent contractors, and self-employed individuals, and what is not included. Something important to note is that if you have employees that make in excess of 100,000, you cannot include any compensation above those 100,000. You can count them up to the 100,000, but not beyond that. Payroll taxes cannot be added into the calculation. So your Medicare, your Social Security taxes, all those cannot be included into your payroll costs. And of course, if you have any employees that reside outside of the United States, those cannot be counted. And there are some sick leave wages that are allowed at credit under the Families First Coronavirus Response Act, which I believe we're going to address in more depth later. So those qualifying expenses that under the Families First Act are not allowed to be counted for the payroll cost. So how do we apply? So you will go to one of the SBA's approved lenders. On the SBA's website, as I added, they have a link specifically to find lenders that are participating of the Paycheck Protection Act. Traditionally, all lenders that are SBA approved qualify, but not all of them have chosen to participate. And each lender, as the senator mentioned, they're allowed, they were not regulated by the law in terms of what they do and what they don't and how they handle some of the details of the program. So some of this is on a lender by lender basis. So my first suggestion is to check with your bank, the bank that you currently do business with, and start with them to see if they participate, because we've been hearing that those businesses, individuals that already have existing relationships are being prioritized simply because of the large volume of applications. So the documents that you would want to be gathering for this in order to apply are your prior year returns. If you haven't filed your 2019 taxes and there's a deferment on the filing deadlines for those, I will gather your 2018 tax returns and then have your 2019 financial statements available. You want to have your last 4 quarters of payroll forms, 941s, for example, to verify your payroll, and employees and payroll incurred over the most recent 12-month period. And of course, you want to highlight anybody that's made over $100,000. And if you're a self-employed individual obtaining 1099s, you would want to include that. I want to make a clarification point here as well. Some people have asked, a common question we received is, if I employ 1099 contractors for my business, can I count them for my payroll? No, you cannot. 1099 independent contractors are able to apply for the program on their own. So they don't count towards the employer's, the business's calculation.
Hey, Val,
so what happened? Yes.
Just for clarification, so a lot of the people I've had questions on, is hairdressers. I have a salon. Each of these hairdressers, they rent a chair from me. They are 1099 employees. I'm trying to keep my salon afloat. They just pay me portion of the chair proceeds. So how does that qualify, or how would people go about to do that? Or I've had other questions on independent contractors, but I think they sort of fall underneath that.
So again, independent contractors are qualified under this program to apply on their own. So a business can't claim them because you could basically have the risk of people claiming them on the payroll, and then the independent contractors also applying on their own. So that's being avoided by independent contractors cannot be counted for a business. The independent contractors, so the hairdressers, would basically qualify to apply for themselves. And because a portion, so it's 2.5 times the wage amount that they would normally receive. So they're able to spend a portion of that on keeping the chair if they would want to contribute back to that hair salon. My suggestion for people that find themselves in a situation where they depend in part of the income of their independent contractors is to consider applying. I mean, if they're sole proprietors to LLC, they can apply for their own low wages, and then they can also tap into the disaster loan to cover other expenses such as utilities, rent, etc. that they may not be able to cover with the Paycheck Protection Program because they don't have enough employees to make that amount significant. So going back to the loan, what happens when you close? So once you close, over the 8 weeks following getting the loan, you have to use the funds for those allowable uses that we were talking about, those payroll costs, rent, utilities, mortgage, and that interest. And again, keep in mind that no more than 75%, no more than 25% should be used for expenses that are non-payroll related. You have until June 30th of this year to restore your full-time employment and salary levels for any changes that you made from between February 15th and April 20th. Now, because they're trying to encourage people to bring employees back, and they are aware of the fact that some people have already laid employees off, part of the program allows for bringing employees back slowly up to the full-time employment over a period of time without being penalized in terms of that loan forgiveness. So that's important to note, that you don't have to bring everybody from one day to the next, but by June 30th, you should have restored everybody back to normal. So in order to receive that loan forgiveness, you do have to apply for it. It's not automatic. And you have to submit documentation, again, proving that you used those funds for what they were meant to be used for. The SBA basically pays the loan forgiveness amounts to the lenders on behalf of the borrowers. And there is no taxable income to the business as a result of that loan. And then again, if you use them to cover those payroll costs, interest payments on mortgage, rent, and utilities, then the loan may be forgiven. You have to be careful and make sure that you're using at least 75%, again, towards your payroll cost, because otherwise those things that you use in excess of that may be converted into a loan. It's still a 1% interest loan, but I know everybody wants to try and get that forgiven, so it's an important point to keep repeating. Is there a possibility that I would have to pay back? Absolutely. So that's why you have to be careful. One of the things that we've been suggesting our clients do is to open up a separate checking account so that you can track all of the money coming in and out of that loan that you received, so that you can properly account for how you're spending those funds. So if you used the amount of the loan for anything other than the allowable cost, you will owe money at the 1% interest rate. And if you don't maintain payroll, your staff and payroll, you will also owe money. So again, the number of staff, right? If you decrease your full-time employee headcount, then the loan forgiveness will be reduced. If your level of payroll is reduced by more than 25% based on the wages from the prior year, the loan forgiveness will also be reduced. And then the point that I was talking about of rehiring, you have until June 30th to restore your full-time employment and salary levels for any changes that you made between February and April. So I'm going to quickly go. The economic injury disaster loan has been around for a little while now, so many of you may have already applied. If you have questions about those, we're happy to answer them. Again, the information is included in our guide and on our website. And anybody can register for assistance with us to have an advisor work with you one-on-one to address the specific details of your situation and what combination of resources might be best for you. So within the economic injury disaster loan, there's a cash advance that people have been calling a grant. So there is a couple of caveats to that, and so I want to make sure that it is clear and understood. So first of all, it's not necessarily $10,000. The language says specifically up to $10,000. So if you have applied to the disaster cash advance, which is forgivable, hence why people are calling it a grant, keep in mind that it doesn't mean that you will automatically get $10,000. This is provided as a cash advance, and it can be forgiven if you spend it on allowable uses, right? So the allowable uses for the economic injury disaster loan are a little different and a little more flexible than the Paycheck Protection Act, because again, the other act is specifically designed to maintain your workforce on payroll. So this can be used also for maintaining payroll, for paid leave, for any increased costs that you may have had due to supply chain disruption, mortgage or lease payments or rent. So again, keep in mind the Paycheck Protection Program, for example, cannot be used to pay your mortgage principal. The economic injury disaster loan can be. So hence why it's important to understand the nuances of both and figure out, what might be best for your specific conditions and what you have to do. So the latest word that we received from the Small Business Administration is that the way that $10,000 advance is being calculated is $1,000 per employee. So if you have, more up to 10,000, right? So if you do have 10 employees, then you may be able to get those 10,000. If you have less than that, if you have 5 employees, it's more likely that you will get 5,000 and not the 10. So I don't know, Tom, if you want to open it up for questions about this specifics, or if you rather move to the next and take questions at the end. That's up to you. You're the captain.
I've got the questions coming in fast and furious here. We've got a couple employment questions. So just going back, I think there's still a little bit of confusion between the two different programs out there. And what would you be recommending? So if I am a sole proprietor or a 1099 employee, what would you be saying, would you be directing me towards in terms of being able to apply for either one of these programs? I've had another couple questions in terms of, what happens if an employee quits, or if we laid off an employee in February, other than the reason for COVID, how does that work? Is this in terms of rehiring employees, do we count them, or is it discounted on the amount of that 75% of the previous year?
So it's you have to keep your payroll levels. So let me go back to this. So you have to keep your payroll levels by at least 75% of what they were the previous year, right? So if you lost an employee, unless that employee happened to make, a significant amount more than anybody else did in your payroll, losing one employee should not be, something that prevents you from getting that loan forgiveness. And again, businesses document, right, when employees get fired or when employees are reduced. So those are things that can be shown and justified.
Just going on, I got a couple more questions here. As it relates, so we own real estate in single member or partnership LLCs. Are these LLCs eligible to apply under the PPP? They do not have payroll, but do employ a number of subcontractors for routine maintenance. We have reduced income because many of the tenants are suffering from forced closure or job loss.
So again, the Paycheck Protection Program is designed to maintain your regular workforce. If you do not have employees, or you're not considered, a sole proprietor or independent contractor yourself, then you would not qualify for the Paycheck Protection Program. What I would say, though, is that, that's part of the reason why the disaster loan exists as well. So those businesses, unless you are a real estate developer, because real estate developers do not qualify for either program at the moment. The people that do have real estate holdings for rental purposes do qualify. So the disaster loan could be an option to help you sustain your expenses and sustain your business if you don't qualify for the payroll program. And again, because there's a lot of nuances and a lot of individual circumstances, and people want to understand, what's best to take advantage of, you qualify for, you could do both the disaster loan and the Paycheck Protection Program in some circumstances. What you want to make sure is that if you're using, because the disaster loan is allowable to be used for payroll too, you want to make sure that you're not accidentally using for the same pay period, because otherwise that portion may not be forgiven. So I have a bit of a highlight here as to both the Paycheck Protection Program that we've been calling PPP and the EIDL, which is the disaster loan, just for you to be able to briefly compare. One important thing to note is that there are no payments for the first 6 months for the Paycheck Protection Program and no payments for up to a year for the disaster loan. Of course, the disaster loan, aside from that up to $10,000 cash advance, the rest of the disaster loan is a loan. It's not forgivable. The only portion that is forgivable is that up to $10,000 cash advance. So if you do have employees, contractors or proprietor, you want to apply for the Paycheck Protection Program, and then you may want to compensate some of that with the grant and or the loan. And for those who do not qualify for the Paycheck Protection Program, you still have the disaster loan to help you in the meantime, and you don't have to make payments for the first 12 months. There's no penalty for prepayment if things, come back faster and you want to get rid of the debt, but you do have that option if you find yourself in that situation. I'm sorry, I'm not hearing you.
Sorry, I muted myself. I had sirens going by. So under the Paycheck Protection Program, in the loan application, a portion requires a list of shareholders up to 51%. There are small public companies that would qualify less than 500 employees and the other criteria. However, the application is limited to 5 lines and requires detailed information for each shareholder which a public company would not have, such as social security numbers and other identifiable information. How do companies deal with this limitation, as we are told that these would automatically be rejected without that information?
To be honest, I have not run into public companies at the moment, and there is nothing specifically listed in the current guidelines that addresses public companies. So that may be something that we can bring up to the Small Business Administration as a question, and try to get an answer from them, and then get back to whoever's having those questions.
Perfect, excellent. Thank you so much, Val. So we're going to move.
My pleasure.
We're going to move to our third panelist. Michael, I'm going to turn you on here. Michael, would you like to introduce yourself to the audience and just give a bit of your background?
Hi, my name is Mike Dowd, and I'm a tax partner at the New Haven office of Marcum LLP. Okay, and we've been working on the tax-related issues coming out of the CARES Act and other IRS and Department of Revenue Service actions. So let's start with the IRS and Department of Revenue Service actions. The first, I'm sure everybody is aware that income tax returns were extended by the federal government that would normally be due 4/15 to July 15th. And also there's been a deferral of the payment of taxes to an unlimited amount. Now, when that was originally announced, there were caps on the amount that could be deferred. At this point, the amount that can be deferred to July 15th is unlimited, and it also includes the first estimate of taxes for 2020. Now, Connecticut also issued an extension of both the tax return and the first and second estimates, even the one due June 15th to July 15th. Now, the federal government has indicated that an additional extension can be granted to October 15th, and you don't need to make that request for an additional extension until July 15th. So you don't need to do that now. You can wait till July 15th and ask for an additional 3-month extension. An important item is if somebody has already filed their 2019 income tax return with an automatic withdrawal date being scheduled, IRS is not going to delay taking those funds to July 15th. You have to contact the IRS, cancel that scheduled payment, and then reschedule the withdrawal. Afterwards, the initial notice, both the federal government and the Department of Revenue Services deferred filing a payment of gift taxes until July 15th as well. And IRS also launched a People First initiative, which delayed some administrative actions dealing with audits, liens, levies, and if you were part of an installment payment agreement, and generally non-payment can cause a default of the agreement. If you have a payment due between April 1st and July 15th, those are additionally delayed until July 15th. Now, one common question with the delays is, well, has IRS also extended the date for making IRA or health savings account contributions? And they have. So those don't need to be made on April 15th. They can be paid on July 15th, as well as employer qualified plan contributions. With respect to the CARES Act specifically, there are a number of payroll tax provisions that are important. One is the employee retention credit, and that deals with employers who meet one of two qualifications. You don't need to be both, but just one of two. You have to be with someone whose operations are fully or partially suspended due to orders from an appropriate governmental authority that limits commerce, travel, or group meetings as a result of COVID-19. The second requirement, which is an alternate requirement, is that if your business is still operating so that you haven't incurred a full or partial suspension, then you've had a significant decline of gross receipts, which means for the period starting in the quarter where your gross receipts are less than 50% of what they were in the quarter for the prior year, same quarter, up through the quarter where your gross receipts get to being greater than 80% of the gross receipts for the same calendar quarter in the prior year. For that period, you're considered to be an eligible employer to take advantage of this employer retention credit. For the quarter following that, if you're taking the second qualification, then you're not eligible. The credit is 50% for the first $10,000 of qualifying wages that you make for all quarters per employee. So that's $5,000 maximum per employee for qualifying wages paid from March 13th through the end of 2020. Now, the computation of qualified wages does depend upon the size of the business. If you are an employer with that averaged 100 or fewer full-time employees in 2019, you can take the credit with respect to all qualifying wages. But if you were somebody that had average of more than 100 full-time employees in 2019, then the credit only covers wages that are paid for people that are not providing service. So essentially for non-work hours. That's what the credit will cover if you were a larger employer. And in determining whether you are a larger employer, you have to aggregate yourself with related companies based upon the Affordable Care Act rules, which are essentially pension type rules. So if you're a controlled group of corporation, commonly controlled businesses, or an affiliated service group, you would have to aggregate those companies together to determine whether you meet the 100 or fewer or the more than 100 standard. You cannot get this credit if you get a Paycheck Protection Program loan. And you also cannot use wages that are covered under the Family First Coronavirus Response Act, emergency sick pay, or expanded emergency and family and medical pay leave, because those dollars are being reimbursed by the government. And you also can't get it on wages for which you receive work opportunity credit for the employee. Now, what is the mechanism for getting this credit? And the mechanism is really the same that will apply for the emergency sick pay and emergency family and medical leave. What IRS has told us is that employer can reduce the amount of employment taxes they would have to deposit. So you don't have to pay those dollars over to the government. And if the deposits are not sufficient to cover the amount of credits that you're entitled to, you can claim the balance as a credit when you file the 941 for the quarter, or alternatively, IRS has just issued a new form, Form 7200, and you can actually request an advance during the quarter on the amount that you're short in terms of the deposits covering the credits. So that's basically the mechanism. Now, while the employee retention credit applies to wages that are paid between March 13th and the end of the year, IRS has issued an addendum to Form 941 that says if you make payments in the first quarter, you don't include that credit until the second quarter. A second employment tax benefit is the CARES Act allows employers to defer the employer share of Social Security taxes. So that's the 6.2% that the employee would pay with respect to employee wages. That doesn't have to be paid in 2020. Instead, 50% of that can be paid on December 31st, 2021, and the other 50% on December 31st, 2022. Now that's done through a reduction of the payroll taxes. For a self-employed person, they get a comparable benefit against their self-employment taxes, and they would get that computation when they do their income tax returns, but can reduce their estimates for the year in order to get a current benefit of those dollars. And once again, this employment tax benefit is not allowed if you receive a PPP loan. So you have to see where you are in the process. If you applied for a PPP loan, you may want to wait before you try to take these credits to see if a Paycheck Protection Program loan comes through or not. So as not to have deposit problems. CARES Act also put in a number of business provisions which are intended to provide deductions, get cash to employers more quickly. The Tax Cuts and Jobs Act eliminated the ability to carry back net operating losses. For the 2018, 2019, and 2020 years, if the net operating loss is generated, those can be carried back 5 years. One thing that does is potentially carries back the loss to a higher rate year than currently. I mean, if you're a C corporation, you could be bringing it back to 35% year versus a 21% year, which is the current rate. There are some special rules if you had a transition tax, a 965 inclusion, and some other considerations that you have to think about whether you want to elect out of this provision or not. In addition, net operating losses for these years will not be subject to the 80% taxable income limitation. So you can effectively use 100% of the net operating loss and get back all the taxes that were paid in prior periods. There was for non-corporate taxpayers under the Tax Cut and Jobs Act a limitation on the use of excess business losses, which were not allowed to be used against non-business income to the extent of $250,000 for an individual and $500,000 for a married couple. That rule is suspended until 2021. So if it applied to you in 2018, 19, or 20, there's a potential for a refund claim. In addition, if you're subject as a C corporation to the AMT credit prior to 2018, there was a rule that allowed you to recover those credits over a 4-year period. You now can recover it over 2018 and 2019. So if you're just about to file your 19 return, you can claim the balance of the unrecovered credits, or you can amend 2018 to do that. For 2019, the law changes the business interest limitation rule so that previously you could only deduct business interest expense to the extent you had business interest income, and then 30% of an item called adjusted taxable income. That percentage is raised to 50% for 19 and 20. So again, potential for you to get an additional deduction in 19 and 20 and maybe a carryback claim. But there is a special rule for partnerships in terms of how this works. So this will affect your 2020 return if you're a partnership. And finally, in terms of the business items, there is the fix of the bonus depreciation glitch on qualified improvement property, which is a big item under the Tax Cuts and Jobs Act. If you made qualified improvement property improvements to your commercial real estate, it was intended that you would be able to get bonus depreciation, and if you didn't take bonus depreciation, a 15-year write-off period. Because that language was never put into the law, IRS indicated you had to write that off over 39 years. This is retroactively fixed going back to 2018. So now these items can be subject to immediate write-off, or if you don't elect immediate write-off, only a 15-year depreciation life. Again, more refund opportunities. There is a potential issue if you are a partnership under the centralized partnership audit rules in terms of whether you can actually go back and claim a refund for prior years, or whether it will affect your 2020 years. We're waiting for guidance from Treasury on that, and even some of these other items in terms of the implementation. Okay, finally, just two quick individual items. The highly publicized item was the cash stimulus rebate. You know, it's $1,200 for an individual, $2,400 for a married couple, $500 for a qualified dependent child who was under 17. A dependent or a non-resident alien is not eligible for a separate cash rebate. Now, the way this is going to work is IRS is going to base this on the most recently filed return that they have. So if you haven't filed 2019 because it's on extension, they're going to use 2018 information. If the 19 information is on file, they'll use 2019 and they'll calculate the cash rebate. But there's a true-up calculation on 2020 where you have to calculate the credit based upon the facts that exist in 2020. And if you were underpaid through the cash rebate, you get the difference. If you were overpaid, it is unclear what happens because the original Senate bill and the CARES Act is silent on that. So we're waiting for guidance from Treasury to see whether they have enough nerve to say that you actually have to pay that back if you've been overpaid. The House version of the bill, which wasn't passed, did indicate that the difference wouldn't be paid back, but it would come back to you as an individual received it as taxable income. Okay, Tom, and if there are any questions?
I've got a lot of, okay, hang on a second here. So I've got a lot of questions as it relates back to the guidance that you're talking about. Are you able to provide some documentation in terms of being able to direct some of the people on this? You know, some people were a little confused on it. You know, a lot of this stuff is, as I know, we're waiting for new guidance to come in. But if you have anything that we could direct people to, that would greatly be appreciated.
Yeah, Tom, what I'll do is I will send to you some materials that we have on this along with the IRS sites, because they have issued notices and releases concerning the mechanism, and actually have a frequently asked question site with respect specifically to the employment retention credit that also goes over that.
Okay. We did get one question on property taxes in Fairfield. For people who didn't know, the state has asked each of the different municipalities to look at how they're going to collect the property taxes, and they've given them sort of two choices. One is to delay the collection of the property taxes or to allow for the reduction of the penalty. So I know Stanford is moving forward with the reduction in the penalty for not paying your property taxes. But the municipalities will have a choice of doing either one or both together as part of relief for our property owners. Another question just came up. So independent contractors, some clients pay 1099, some must pay, some must put you on a W-2 income like CBS, ABC due to the rules with federal government, but not as an employee of these companies. So how is the tax implications going to work for independent contractors?
Well, with respect to the employee retention credit, wages are defined as being FICA wages. So if these are wages that are subject to FICA taxes, then they're considered to be wages for purposes of that credit. And with respect to the employer Social Security, the withholding of the employer share, again, it would be, if they're FICA wages, subject to Social Security taxes.
Excellent, thank you. All right, we have approximately 20 minutes left. We'll probably go over just a little bit. I'm going to now turn it over to there we go, attendees. As part of our presentation, Dan Schwartz, if you want to introduce yourself to everybody.
Sure. Good afternoon, everyone. My name's Dan Schwartz. I'm an employment law partner at the law firm of Shipman and Goodwin with an office in Stamford, Connecticut. I'm going to talk about some of the employment law issues here, but we'll probably go over some things quickly. So if you look at the handout, I've given some links to some of the materials. Our firm, just to tout it, has a coronavirus resource page with lots of alerts, lots of information for employers there. I also do a separate employment law blog called the Connecticut Employment Law Blog, where I talk about a lot of those issues as well. So I'm going to focus on really four things real quickly. The first is there's a new executive order that came out last night. If you're still running as an essential business, you need to be aware of these rules ASAP. It's Executive Order 7V, and you can find it on the Connecticut government's coronavirus landing page. And essentially what these rules set up now is specific guidelines that your business must follow in order to keep operating. And there will be things such as breaks, such as checking employees' temperature, providing masks where appropriate. So if you are doing in construction, you still have your business open because of for other reasons that you've fallen within the exemptions, you're going to need to pay careful attention to those, because Governor Lamont in his press conference yesterday indicated that penalties and inspections can be done, particularly if your employees are reporting you to the Department of Labor. Second thing I wanted to mention is we've been talking a lot today about the loans and keeping employees on your payroll. And I think, as Senator Murphy noted at the outset, this is really designed to be an alternative to unemployment. But you may find, because of your business either being closed or elsewhere, or other things, that's not really a viable option for your business. You can't really keep them on your payroll without some changes being made. So what I've outlined in my handout is that you have other options to consider. Layoff is one of them, where you sever the employee's relationship with your company and you can always rehire them later. But another option which is available is something called a furlough. That furlough you should view as basically a forced unpaid leave of absence. And it would cut off all pay, cut off all hours, cut off all work that you would assign to the employee. And they would be an employee in name only, but the employee would still be eligible to collect unemployment. And that'll be important when I talk about what the CARES Act does there. Some of the other options that are available are to reduce your employees' hours, to reduce their pay. And the Connecticut Department of Labor also has a program called the Shared Work Program. That's a really important and useful program now. It allows an employer to reduce an employee's hours by 10 to 60%. You keep their benefits on for this period of time. You pay them your proportionate salary, and the Department of Labor will provide them with an extra benefit on top of that. And as I'll talk about with the CARES Act, those employees would also be eligible for a $600 a week supplement from the CARES Act as well. So it really does provide an alternative to simply laying people off there. I don't have time to get into all the particulars, but the Department of Labor does a pretty good job on their website with a frequently asked questions on the Shared Work Program. The application has some details that you need to do, but if you're looking to be creative in a way that doesn't necessarily lay people off and you can't afford to keep them on as full-time employees, the Shared Work Program which has been around for a while, is a good alternative there. Third thing I want to talk to you about is the Families First Coronavirus Response Act. We've spent a lot of time on sort of the stimulus package, which was, I think, viewed as the third part of this federal response, but the one that really got some of the headlines before was this Families First Act. And there are two big portions to that. There is a paid sick leave, emergency paid sick leave provision, and a expansion to the Family and Medical Leave Act. The important thing to know is that for employers that have 500 or less employees, the emergency paid sick leave says that employees who either get sick or are taking care of someone who is sick with COVID-19, or who have their child's school closed and need to take care of their child, and they are otherwise unable to work because of that, they would be eligible for paid leave from the employer at a rate of either up to $511 a day or $200 a day, depending on which category they fall into. You as an employer will be eligible for a tax credit on that, and the CARES Act, as Michael said, allows you to take an advance on that as well. You do not have a lot of options about that, but the Department of Labor over the weekend came out with new regulations that answered a lot of questions that we had in this, and I've summarized that again on our website as well. And that leave calls for paid leave for up to 2 weeks, essentially, of a person's illness. After that point in time, the employee may be eligible for this additional leave under the family medical leave, but only for taking care of someone's child who's home from school. If it's in that case, they can get paid leave up to, again, $200 a day or $10,000 total for 10 weeks. If they're otherwise meet the qualifications of FMLA, which is that you are an employer 50 or more employees, those existing rules on FMLA haven't changed. It is just this sort of add-on rule that will impact smaller employers as well. 2 more things just to understand about it. There are exceptions for anyone who is a healthcare provider, as broadly defined in that, or who is providing services to healthcare providers. So if you're in the supply chain, manufacturing for healthcare providers, all those employees would be exempt. And then secondly, the Department of Labor did come out with an exemption for employers that are 50 or less. And there are 3 categories that you need to fit in about that. Again, I'm not going to get into too many details here. They're in the handout. But again, if you're a small employer, 50 or less employees, you should look to see if you qualify for any of those exemptions to allow that may not require you to pay out this paid leave. You can still do that if you want, but it provides the employer with some extra help as well. And then the 4th thing that I want to mention to you that you should be aware of are these unemployment provisions of the CARES Act. We've spent a lot of time today talking about the Paycheck Protection Act, and I think it's a very, very worthy program. But the unemployment compensation that they've provided as well is not insignificant. And I think for employers that are looking to provide employees with at least some minimum safety net where they can't bridge people, you can't either take advantage of the loan or the business isn't there that you want to keep them on payroll. What the CARES Act provides is that for anyone collecting and who is eligible for unemployment under the state law will get a flat $600 a week supplement from the federal government that will be paid out through the state programs. And according to the guidance we've gotten over the last week, that would apply to the shared work program. It applies to partial unemployment as well. And so although it may seem odd, I think the federal government has made it clear that there are people who are unemployment, particularly those making less than $65,000 per year annually, who may end up getting slightly more on unemployment than they would from salary. Now, that's not a reason to lay people off for sure. And there are certainly other ramifications to having layoffs and furloughs. You have to also decide about health benefits and how that's going to be continued. But the $600 a week supplement that's provided under the CARES Act provides a far more substantial safety net than existed. So someone who's laid off now could get, again, up to a cap of $649 from the state, and then an additional $600 a week from the federal government. So it's a potential that someone on unemployment could get for, the next several months over $1,200 a week. Again, it's not a full salary replacement for those who were making more than that, but for those at the lower end of the salary spectrum in Connecticut, it does provide for some additional protections in the short term. The CARES Act also provides that this $600 can go to people who weren't otherwise eligible. And those are those 1099 contractors that we were talking about before that may not get traditional unemployment because they are contractors. This $600 now should be available to them under a separate provision of the CARES Act. And those are the gig economy workers, the Uber drivers that we were talking about. Certainly the hairdressers are those types of 1099 people who may fall within this. And so again, even though the Paycheck Protection Act may not be applicable in some situations, the unemployment might be. So I think a really important takeaway from this is you have to understand all these different moving parts are going on. And just because you're looking at either the EIDL or the Paycheck Protection Act, you've got to look at the unemployment. You may look at the shared work program. And so I think for those who are really confused by all of this, it's sort of sit down and think about where might you be getting some supplemental help from. And it's not all in one place, unfortunately. You would find it with the Department of Labor. The IRS has some guidance. Treasury has something on it. Connecticut certainly has multiple things, and I know we have a link to it in the materials and certainly attached. But the Department of Labor website has an excellent FAQ, the Connecticut Department of Labor, on really questions that you should be thinking about as well. So there's lots of resources out there. You shouldn't feel like you're stumbling through this alone. And I think for employers in Fairfield County going through what is going to be a really challenging time, seek out your banks to help, seek out your lawyers, seek out your accountants. We're all too happy to help navigate through a very challenging and system. So I know we've got 5 minutes left for questions, so happy to, I know you said, Tom, there were some employment questions, so rather than keep rambling on, I'll leave a few minutes for those questions.
So we have about 130 questions that have been asked, and we're not going to be able to get to all of them. And I appreciate everybody for sending them in. We will get answers for you. So one of them came in, Dan, is are insurance carriers stepping up to allow modified eligible provisions for employers who are using shared work or other reduced hour programs?
Yeah, so that's an excellent question. And so really what the question goes at is normally for your health insurance, the employee must be an active employee and typically maybe 35 hours a week or more. Many insurance companies, from what we've heard, are allowing employers to waive that if they so choose and to allow that employee to continue. It's really actually important on the shared work program because one of the requirements is that the employers maintain all of the benefit levels as well. So the employers, you're really going to want to work with your brokers or your insurance companies to talk about that. If an employee's been furloughed, the employer may still be want to continue their health benefits as well. But if they don't, even though they're furloughed, the employee may be eligible for COBRA. So again, lots of moving parts, and you shouldn't assume that, just because we did this in the past, we have to follow it in the future. I know insurers have been really all too happy to make sure people can continue insurance if that's what the employers want to do.
Perfect, thank you. So we're still getting a lot of questions on self-employed persons applying for unemployment and benefits through the CT Department of Labor website. We've got a couple questions on what happens if I have an employee quit or that they're receiving unemployment benefits and they don't want to come back to work. How is that being handled? And then as well, there's a couple restaurant questions. We have with the restaurant workers making, the $5.61 an hour. How does that work with the tips and unemployment, and how do we bring people back? And how do we pay them out of the PPP for those types of workers?
So I'll tackle some of the unemployment questions first, and actually, so the real question was if someone quits or doesn't want to come back, how do you deal with that? And the Department of Labor actually just updated their FAQ yesterday to address that specific question. And what they say is the employer should put in a notice to contest eligibility in that instance. And the Department of Labor will look at it on a case-by-case basis. So, if you have a job for employee and the employee doesn't want to work, you could certainly contest that in that instance. For people who have been self-employed and who aren't traditionally eligible, I know the Department of Labor was trying to incorporate the CARES Act. They haven't finished doing so according to the most recent guidance from that, but there should be a mechanism that will allow those people to get at least the $600 from the federal government in many instances. So again, don't assume just because you weren't eligible in the past that you can't get something now, but you might have to wait until the procedure is really established for that. On the PPP, I'll let Valeria respond. But I think we lost your vocal.
Hey, Val? All right.
There we go.
There we go.
I think something important to know is you can apply. So if you're an independent contractor or you are self-employed, when the benefits become available through the Department of Labor, you can apply to that, as Daniel was mentioning. What you want to be aware of is that if you are also applying to the PPP program, you can't have those two things going at the same time, right? Otherwise, you will have to pay back that loan and it will not become forgivable, or you may actually be precluded from even getting those funds at all. So anything that, if you, let's say you become qualified to go for unemployment, and you already took the PPP, make sure that you use the Paycheck Protection Program funds for the period that you said that you were going to use them for, and then you can go for unemployment after that, so that you're not overlapping those funds and basically shooting yourself in the foot. Does that answer the PPP question, or was it more detailed? Because there were a few questions rolling, and I may have missed the detail there.
We've been getting a lot of questions just on this. I think there's still a little bit of confusion. I almost think we have to set up another webinar just on this alone, because I think we've got a majority or a lot of people in here that are small business owners that are either determined as independent contractors or self-employed. And I think there's still confusion on which programs can they apply for the unemployment benefits, can they do the PPP, or should they go for the 7A loan?
Right. And again, that's part of what I wanted to mention before. We are working with everybody, sole proprietors, independent contractors, nonprofits, small businesses, even though our task is usually to work with small businesses. So sign up, either us at the SBDC, and I mentioned before, ctsbdc.com. It's also in the guide. But whether it's us, there's also our partners from SCORE and the Women's Business Development Centers. Everybody is available to help you at no cost, so that we can walk you through the questions that you may have. If it's something that we can't answer, then we'll tell you, go to your accountant, go to your lawyer, right? Which is what we always do. We're not lawyers or accountants, so we're not going to provide you with legal or accounting advice, but we can guide you through the programs available. Visit our COVID-19 Resource Center. The Department of Labor guidelines are there. We have them there. All of the announcements that have come from the governor's office related to small businesses, etc., are there, including the update that Dan was mentioning from the guidelines from the governor yesterday. So we are doing our best to keep the resource center as up to date as possible. Use it to your advantage, just to check in and see what's going on and what's new. And again, use this as a resource. It doesn't cost you a penny. It's your taxpayer dollars at work. So might as well take advantage of it.
Excellent, thank you. So I just want to remind everybody, we've been getting a lot of questions in here in terms of resources. So we have put handouts to the side. So if you click on that side audio bar, you open that up and you look at handouts. We do have the DCD Small Business Owner Guidelines there that you can download. The Department of Labor COVID Frequently Asked Question Sheet that Dan mentioned. We have the Paycheck Protection Program Frequently Asked Questions as well. We have the Small Business Development Center's COVID-19 resource guide. That was part of the PowerPoints that you saw earlier. They've put that out. We have that available for download. And then as well, it says Stanford PDF. That is part of Dan's presentation that he did, and that is again available for download. Again, we'll be answering as many of these questions. So let's, if we can stay on for everybody for about another 5 minutes, that would be great. I just got a couple more questions here. In terms of delays for unemployment applications, I want to throw in the SBA loans as well. What are we seeing in terms of delays out there for when you apply to when you're actually hearing back? And is there any tracking mechanisms that should be, these people should be getting?
Well, I know for the unemployment, the stats I saw this morning were staggering. It was 280,000 claims, which is just, a staggering number. I think they had processed a little over 100, 115, 120,000 as of yesterday. And I think they're on about a 4 to 5 week backlog on unemployment. What they have said, though, is you will get the money going back. So, it will be from the date of application, but obviously that's going to be a hardship for some people who may live paycheck to paycheck to not have that income replaced on that. And Val, you want to talk about the PPP loans and when people may get some of their money there?
I wish.
Yeah.
We don't have enough information. So one thing to note is the program went live last Friday for small businesses and sole proprietors. And when the program went live, not every bank implemented it right away. There are some banks that are still in the process of implementing this that do want to participate. But as you have seen, there's a lot of details and a lot of layers, and banks want to make sure that they're doing it right. The program has not opened yet. The PPP program has not opened yet for independent contractors and the self-employed. That is opening as of this Friday, the 10th. Some banks already have information that you can use to either put yourself in a wait list for when they actually put the program live. So again, I would suggest that you check the list of participating lenders. When it comes to, the timelines, they're also experiencing unprecedented volume, whether it is for the disaster loan or for this particular program. The disbursement of funds seems to be fairly quick once all of the paperwork is processed. But again, the issue is the volume of paperwork that everybody's receiving is so huge that it's hard. We've been asking about timelines, and I think it's difficult to answer even for the people that are in charge of those programs. But again, the more you do ahead of time, like if you have all your paperwork ready before you submit the information to the bank, if you have all your paperwork ready as you're going through the disaster loan application process, then by the time that you get contacted, then the process is going to go a lot faster. So take a look at the documentation necessary, reach out if you have questions. When it comes to the disaster loan and grant, one common question has been like, I'm not getting an email confirmation. What's going on? There is no email confirmation. Your loan application number, or take a screenshot once you get to the final screen so that you can have a number to refer back to. And those things are, again, taking time to be processed internally just because of the volume. So hang on tight. I know it's difficult for everybody, and we wish we had the money yesterday, but hang on tight. Reach out for help in the meantime so that you have everything you need once somebody reaches out to you. And we'll continue to keep you posted as we get any updates in terms of timelines.
Hey, Tom, one issue concerning the stimulus payment is that's supposed to be processed and issued automatically. Now, IRS is going to use the information they have on file if they have a bank account to pay it to. And that may be a bank account that's listed on somebody's 18 return, because your 19 return may be on extension. So if that information isn't correct, you kind of need to contact the service to get that information corrected. If somebody didn't file an 18 or 19 return because they don't have to file, if they receive Social Security, IRS is going to use the information that they receive from Social Security to calculate the payment and make the payment to whatever account is Social Security checks are being deposited to. If IRS doesn't have the information of a bank account to deposit it to, then they're going to write physical checks, and that can take a real long time because the volume is going to be enormous.
That's some really good information on that one right there. What I'm going to do is we're going to start, we're going to wind this down right now. I will take one last question here. And just for clarification, this webinar has been recorded. We will be posting it on the City of Stamford website. We will be sending out the links to each of the Chamber of Commerce so that if you missed part of this or had to log off early, because I know this is an hour and a half and that's a lot of time to take out of your day, you'll be able to watch this at some other point. Again, we have the handouts at the side. I do encourage everybody to go to the Small Business Development Center's website. They have an incredible website on the COVID-19 response. It's all laid out pretty much, you know, to be able to find that information as quickly as possible. And then, you know, like I said, any other questions you have, I'll be reorganizing them. I'll be getting out to the panelists to see what we can do. A lot of the questions that have come in are actually answered under the frequently asked questions in some of the handouts that are already out there. But anything that is not, we will be getting answers to that. So let me find my last question here. I've hired a lot of people towards the end of the payroll period for the payroll protection program. When determining the number of people I have kept employed to get the loan forgiveness, do I use my maximum employee headcount or my average employee headcount?
So let me get this correct. So the person hired a lot of people towards the end of 2019?
I would take it into the payroll period. So
The end of the current payroll period? Because let's start. So the first thing that we're doing is we're looking at your averages from 2019, right? So as long as you were in operation during 2019, then what you will be looking at is your average payroll from 2019. And your 2.5 times will be calculated based on that. If you were not in operation in 2019 and you just started your business recently, then you will be looking at your average payroll between January and February of 2020, sorry. And again, we had a distinction of how seasonal versus non-seasonal employers would calculate that. I encourage you to look back at the guide because we try to make it as clear as possible there. And again, you know, you are responsible. This is really important. You are responsible for presenting the right amount to the bank, right? So you got to make sure that you're calculating those numbers properly. The bank may come back to you and have you make corrections, but the onus on those calculations is on you. So if you have questions, if you have doubts, reach out. Free advice.
Excellent. Well, all right. Well, I want to thank, Senator Murphy, who was on at the start for the first little bit. I want to thank Val for basically putting her time together. SBA, for the Small Business Development Center out of Connecticut, is an incredible resource. We have additional resources available on our city website. So if you go to stanfordct.gov, click on COVID-19, you'll see a business assistance there with all of the different programs, similar to what you'll see on the SBDC site. This webinar will be posted on the Stanford website again, and we'll be sending out the links to all of the Chamber of Commerce. And again, we'll be getting out the questions really over the next week. We'll try to answer as much as we can for you and get back to you. I do have your email addresses when you signed up. So we'll be looking for an email from us on that. I want to thank Michael for the tax. We'll be getting some information from him and his from Marcum to be able to post on to the website to answer some additional questions. And of course, Dan from Shipman and Goodwin, again, thank you for your help with all the employment questions. I've got a list of about more that we have that we're hoping to get answered. I know you guys have some white papers up there, so again, we'll be listing your sites as resources for everybody. So again, thank you everybody for attending today. We went over a little bit over, but we had some great questions and there's just a lot of information, and look for some additional webinars in the coming week as we organize them to be able to answer some additional questions and offer you guidance. Hope everybody please stay safe, keep washing those hands, and make sure you can use us as resources. We're here to help you out at each of the different municipalities. I know Mark Bernhard was on town of Fairfield. He's sort of my counterpart over there. I don't know, I didn't see anybody from Norwalk, but again, we have economic development directors in each of the municipalities that are more than happy to help you out, as well as our Chamber of Commerce. They are a great resource for everything that we do here. And they've been pumping out some great information, or at least trying to answer some of the questions that their members have in this sort of confusing, difficult times as we start getting guidance almost every single day and watching change. Last question I will answer is the executive orders. We just got that popping up. All the orders are available on the state website. So for the guidelines for essential employees at businesses, you can find them on the DECD website. So if you go to the main government or state government website, you can click on the COVID and then go to business resources, and it is listed there. We will be putting up on the Stanford website, and I know some of the chambers will probably push that out to their members later on today. So again, thank you so much for your time, and we look forward to seeing you in our next webinar. Have a great day.
Thanks for putting it together, Tom. Have a great day, everyone.
Thank you, Tom. Bye-bye.
Okay.